Hi guys, this is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. Now in the today's class we will be revising company audit. Basically this company audit, it will seem like it is very huge, but all the provisions of this chapter, they are very easy because you have already studied these provisions at your CA intermediate level. So this chapter, it would be quite easy for you people. Now starting with the revision of company audit, first section is section number 139, which will be dealing with appointment of auditors of a company. Now how first auditor will be appointed, how subsequent auditor will be appointed, these will be two bifurcations in this section. Now in case of first auditor, we will be having another bifurcation of first auditor of other than government company and first auditor of government company. Now coming to other than government company, first auditor of other than government company will be appointed by board of directors within 30 days from the date of incorporation of the company. If board of directors, they fail to appoint within 30 days, then they will intimate to shareholders. Now shareholders in the extraordinary general meeting, they will appoint first auditor within next 90 days. This is the procedure for first auditor of other than government company. Now first auditor of government company, first auditor of government company will be appointed by C&AG within 30 days from the date of incorporation of the company. If C&AG fails to appoint, then they will intimate to board of directors. Board of directors, they have to appoint the first auditor within next 30 days. If board of directors also fail, then they will intimate the same to shareholders. Now the shareholders, they have to appoint the first auditor within next 60 days. This is the procedure for appointing first auditor of a government company. This is regarding first auditor, and he will hold the office till the completion of first annual general meeting. And coming to appointment of subsequent auditor, subsequent auditor in case of other than government company will be appointed by members. In the annual general meeting, they will appoint subsequent auditor. This subsequent auditor, he will hold the office till the conclusion of 6th annual general meeting, and after that again another auditor will be appointed whose term will be 5 years. And coming to subsequent auditor of a government company, subsequent auditor of a government company will be appointed by C&AG within 180 days from the commencement of the financial year. Hope this is clear. And that subsequent auditor of a government company, he will hold the office till the conclusion of next annual general meeting. These are the provisions related to appointment of auditor of a company. Now coming to filling the casual vacancy of the auditor. Now the office of auditor can be vacated due to resignation or death of the auditor. Due to various reasons, the office can be vacated. Now once the office of auditor is vacated, how it will be filled? In case of other than government companies, board of directors within 30 days they will have to fill this vacancy. Now if such vacancy is due to resignation of the auditor, see, if resignation of the auditor has caused the casual vacancy, then board of directors, after appointing within 30 days, they have to take approval of the shareholders within next 3 months. Hope this is clear. And the auditor, at the time of resignation, he has to submit the reasons for resignation in form ADT 3 to company as well as to register. This will be the obligation of the auditor. If he fails to submit form ADT 3, then penalty of not less than 50,000 or remuneration, whichever is lower, will be charged to the auditor. And continuous, if there is a continuous failure, then 5,000 per day up to maximum of 2 lakhs will be imposed on the auditor as a penalty. When this is this penalty is when he fails to file this form ADT 3. Hope this is clear. Next, casual vacancy in a government company will be filled by C&AG within 30 days. If C&AG fails to fill within 30 days, then board of directors will have to fill within next 30 days. This is regarding filling the casual vacancy. Next, reappointment of retiring director. Now, after completion of his term, sorry, not director, auditor. After completion of his term, the auditor, he will retire. Now, if you want to appoint the retiring director, there are certain conditions that has to be satisfied. Sorry, again I am using the term director, it is auditor. Okay, if you want to reappoint the retiring auditor, then there are certain conditions that has to be satisfied. What are they? First one, that auditor, he should not be disqualified to be reappointed. Next, no notice of unwillingness has to be provided. Okay, auditor, he should not have given any notice to the company stating that I am unwilling to be appointed as auditor. Okay, I will not give consent for appointing as auditor. If such a type of unwillingness notice is given by the auditor, then that person, he cannot be reappointed as a auditor. Next, no special resolution passed to appoint some other person as a auditor, or specifically stating that retiring auditor should not be reappointed. If the members of the company, they have passed a special resolution stating that we do not have belief in the retiring auditor, we don't want to appoint the retiring auditor, or they have passed a special resolution stating that some other person will be appointed as a auditor, even in that case, retiring auditor, he cannot be reappointed. And if no auditor is appointed, or if no auditor is appointed, then the existing auditor, he will continue to be the auditor of the company. Okay, once the existing auditor has retired and the company has not appointed any new auditor, then the retiring auditor, he will be automatically getting reappointed to the company. Hope this is clear. You can consider this as automatic reappointment. Next, what are the qualifications to be appointed as a auditor? First of all, you should be a chartered accountant in practice. Only chartered accountant in practice can be appointed as a auditor. Even a firm of chartered accountants can be appointed as auditor, and even LLP of chartered accountants can be appointed as auditor. And there are also certain disqualifications to be appointed as a auditor. If the person possesses these disqualifications, he cannot be appointed as a auditor. What are these disqualifications? First of all, a body corporate other than LLP cannot be appointed as a auditor of the company. Okay, in India, auditors, chartered accountants, they cannot do practice in the form of a company. So a body corporate other than LLP cannot be appointed as a auditor. And also a person who is officer or employee of the company. Just a second. Yeah. Okay. Also, a person who is officer or employee of the company can also not be appointed as an auditor, because independence will be lost. If the auditor is employee of the company, then he cannot act as a independently. So an officer or employee of the company cannot be appointed as auditor. In the same way, partners or employees of officer or employee of company can also not be appointed as auditor of the company. And person or his relative or his partner who is holding any security interest in the company, or its subsidiary, or its holding, or its associate or subsidiary of holding, even those people, they cannot be appointed as auditor of the company. Okay, if a person or his relative or his partner is holding any security in the form of shares in the company, or its holding, or its subsidiary, or its associate, or subsidiary of the holding, in that case, such person, he cannot be appointed as auditor of the company. But for this, there is one particular exception. Relative, he can hold shares up to face value of 1 lakh rupees. You have to remember, it is face value, not market value. Relative, he can hold shares in the company up to face value of 1 lakh rupees. Now, if suddenly or unknowingly the value of investment has exceeded 1 lakh for relative, then 60 days of time will be given to the auditor to correct this non-compliance. Okay, in that 60 days, this value has to be brought below 1 lakh rupees. Hope this is clear. And also, if a person, his relative or partner is indebted to the company or subsidiary, holding, associate or subsidiary of holding amount exceeding 5 lakh rupees, even in that case, that person, he cannot be appointed as a auditor. And also, if person or his relative or his partner has provided any guarantee to the company on behalf of some third party exceeding value rupees 1 lakh, even in that situation, that person cannot be appointed as auditor. This is the fourth disqualification and also important disqualifications. On this, MCQs might be asked. Next, if the person is having any business relationship with the company, subsidiary, holding, associate or subsidiary of holding, even that person, he cannot be appointed as a auditor of the company. Next, person whose relative is director or key managerial personnel of the company, even that person, he cannot be appointed as a auditor. Next, if the person is in full-time employment of elsewhere, see, a person who is in full-time employment, he cannot conduct practice as a chartered accountant, so he cannot be appointed as auditor of the company. Next, maximum limit of audits for one auditor is 20 audits. So if at the time of appointment he is having 20 or more than 20 audits, then he cannot be appointed as a auditor, because maximum limit of audits is 20 only. But however, while calculating this 20, you need not include 1% companies, small companies, dormant companies and private companies whose paid up share capital is below 100 crore rupees. Okay, this limit we will be again discussing in the further class. Next, if the person is convicted of fraud by any court and 10 years has not elapsed from the date of such a conviction, even in that case, that person, he cannot be appointed as a auditor. And if person renders any services specified under section number 144, even in that case, that person will be disqualified to be appointed as a auditor. Now, what are that prohibited services? Okay, what are that section 144 services? Let us see. This pen, it is not working properly. Okay, services not to be rendered by the auditor under section 144. First one, account and bookkeeping services, they should not be rendered by the statutory auditor of the company. Internal audit, actuarial services, investment advisory and investment banking services, outsourced financial services, management services, design and implementation of financial information system and such other services as may be prescribed. All these services, they should not be provided by the statutory auditor to the client. Hope this is clear. Next, rotation of the auditors. There is this concept of rotation as per section number 139 subsection 2, which is applicable only to certain types of companies. Now, to whom this concept of rotation is applicable? It is applicable to all the listed entities and unlisted public companies having paid up share capital of greater than or equal to 10 crore rupees and private companies having paid up share capital of greater than or equal to 50 crore rupees, and all those companies whose paid up share capital is below these threshold limits only, but their borrowings are exceeding 50 crore rupees. For all these companies, the concept of rotation is applicable. Okay, for auditors of all these companies, the concept of rotation will be applicable. Now, what this rotation concept says, none of these above companies to whom the concept of rotation is applicable, they should not appoint an individual as an auditor for a period more than one term of 5 years and a firm of chartered accountants as auditors for a period more than 2 terms. Okay, here one term will be 5 years. Individual auditor, they can be appointed for a maximum term of 1, and one term will be 5 years. That means for maximum of 5 years he can be appointed. And in the same way, firm of chartered accountants, they can be appointed as auditor of same company for a term of 2 terms. That means one term is 5 years. That means 10 years. And after completion of this 10 years or 5 years, there is a cooling period of another 5 years. Okay, after completion of this cooling period, again they can be appointed as auditor of that particular company. Hope this is clear. See, individual cannot be appointed as an auditor for more than one term of 5 consecutive years, and an audit firm for more than 2 terms of 5 consecutive years. Here cooling period will be 5 years. That means after completing of one term of 5 years for individual, there should be gap of 5 consecutive years. After that again he can be appointed. And in case of firm, after completion of 10 years, there should be a gap of 5 years. After that again he can be again the firm can be appointed. And here you should remember one term is equal to 5 years. Now coming to manner of rotation. First of all, audit committee will recommend the name of the auditor who should be appointed in the place of retiring auditor to the board of directors. Okay, if the audit committee is applicable to the company, then audit committee will recommend. If audit committee is not applicable, then board of directors they themselves will search for the incoming auditor and they will recommend to the members. So audit committee shall recommend name of new auditor to the board. If no audit committee, board itself shall recommend to the members. And incoming auditor shall not be associated with the outgoing auditor or audit firm under the same network. Okay, there should not be any connection between the incoming auditor and the outgoing auditor. Hope this is clear. Next, coming to the provisions of audit committee. These provisions of audit committee we have also discussed them in audit committee and corporate governance chapter. First of all, applicability of the audit committee. This will be applicable for all the listed companies and unlisted public companies having paid up share capital of greater than or equal to 10 crores, turnover of greater than or equal to 100 crores, and borrowings or deposits of greater than 50 crores. Here equal to is not there, only greater than 50 crores. For these companies, audit committee is mandatory. Now, how the auditor will be selected? For all the companies to whom audit committee is applicable, then audit committee, what it will do is, it will verify the experience and qualifications of the proposed auditor. If audit committee is not applicable to the company, then board of directors will verify the qualification and experience of the proposed auditor. See, audit committee or board of directors shall consider qualification and experience of proposed auditor. They will also consider whether there are any pending proceedings against the proposed auditor. Okay, whether there are any pending legal proceedings against the proposed auditor. Even this has to be taken into consideration while appointing a auditor. And also, audit committee or board may call for further information that is required from the proposed auditors. If the audit committee is applicable to the company, then audit committee will do all this. If audit committee is not applicable, then board of directors will do all this. After that, if there is audit committee, it shall recommend the name of auditor, the name of proposed auditor to the board of directors. Now, if board of directors agree to the recommendation of the audit committee, they will recommend the same to the members. If board of directors do not agree with the recommendation of the audit committee, then they will refer back the same to the audit committee for reconsideration along with the reasons. Now, if audit committee agrees to reconsider, it will reconsider and will suggest another name. If audit committee doesn't agree to reconsider, okay, it is not agreeing to reconsider, it is giving same recommendation. In that case, board of directors, they can reject the recommendation of audit committee along with reasons why board of directors are not agreeing to the recommendation of audit committee. This reason has to be given. By this reason, board of directors, they can make their own recommendation to the members. Hope this is clear. And members, they will consider the recommendation and they will approve it in the general meeting. Next, coming to auditors remuneration. Generally, remuneration of the auditors, it will be fixed by the members in the annual general meeting. However, in case of first auditor, remuneration may be fixed by the board of directors, and in case of government companies also, remuneration it will be fixed by the members only. And you should remember that this remuneration will also include any other facility that has been provided to the auditor. Okay, if you are providing any incidental facility to the auditor, even that expenditure will be part of remuneration of the auditor. Okay, hope this is clear. Next, auditor's removal before expiry of term of the auditor. Okay, you have appointed auditor for a period of 5 years. Let's say before expiry of the term you wanted to remove that auditor, then what is the procedure that has to be followed? First of all, board meeting ordinary resolution has to be passed. Okay, board of directors, they have to recommend for the removal of the auditors. After passing board meeting ordinary resolution, within 30 days they have to apply to the central government asking for the approval for removal of the auditor. This application, it has to be made in ADT 2, and after central government gives its approval, within next 60 days it has to conduct a general meeting of members and pass special resolution in the general meeting. Once a special resolution is passed in the general meeting, you can say tata bye bye to the auditor. However, before removing the auditor, you should also give this opportunity of being heard to the auditor. This is the procedure for removing the auditor before completion of his term. Okay. Next, coming to order of removal by tribunal. Sometimes what happens is tribunal, either on its suo motu basis or on an application made by central government, state government, or by any other person, and tribunal feels that the auditor is doing or auditor is conducting his activity in a fraudulent manner. In that case, what the tribunal it can do is it can order the company to remove such an auditor and appoint a new auditor. And if the application for removal is made by central government and the tribunal is satisfied that yes, this auditor is acting fraudulently, in that case, within 15 days the tribunal has to give a order that that particular auditor has to be removed, and the central government will appoint the new auditor for that particular company. And here you should also remember that once auditor has been removed as a consequence of order passed by tribunal, in that case that particular auditor will be disqualified to be appointed as auditor of any other company for a period of 5 years. Okay, this is the important point you have to remember. Next, ceiling on number of audits. This point we have already discussed. For individual auditor, number of audits are 20. While calculating this 20, you should not consider one person company, small company, dormant company, and a private company having paid up share capital of less than 100 crores. Now coming to the firm of auditors. Now let's say firm is having 3 partners, 1, 2, 3. Now this firm, on behalf of these 3 partners, will be eligible for 60 audits. How? 20 for this person, 20 for this person, 20 for this person. Okay, together firm will be eligible for 60 audits. Now let's say this third auditor, he is there, no, third partner, he has signed some 10 audit reports on his individual capacity. Okay, not in the capacity of the firm, in his individual capacity he has signed some 10 audits. In that case, firm will be eligible for 50 audits only. Okay, for partner 1 20, partner 2 20. For partner 3, since he has already utilized 10, only 10 will be balance and only 10 will be included for this firm. Okay, this is how you need to consider. That is ceiling on number of statutory audits, and the number of tax audits is 60 per auditor. Hope this is clear. And even calculation of that you have to make it in the similar way. Okay, here for counting the 60, all will be included, whether it will be OBC, dormant, small company, private company, all will be included. Okay, this calculation is there na, per person 60. Okay, 60. If third partner, he has conducted 10 tax audits on his individual behalf, then only 50 will be considered in the firm's account. Okay. Next, powers, rights of auditor. What are the rights of the auditor? First of all, auditor, he will be having right to access books of the company, because without accessing the books, how he can conduct the audit? So that is the first right of the auditor. Next, he will be also having right to obtain information and explanation from the employees of the company. Whenever he gets any whenever he feels like he is wanted any information or explanation, he can get it from the company. And then he is also having right to receive notices, and he is also having right to attend annual general meeting of the company, and he can also give report to the members of the company. After conducting the audit, he has to give his opinion. How he will give? In the form of report. He will give the report, audit report, to the members of the company. And the next right is right of lien. This is very important. MCQs might be asked on this. Auditor, he can exercise lien on the documents of the client. When he will exercise this lien? Whenever there is any amount of fee due from the client, then auditor will exercise this lien on the books of accounts. Now, in order to exercise this right of lien, there are certain conditions that has to be satisfied. What are these conditions? First of all, these books has to come to the possession of the auditor in a legal manner. This is the first condition. And the next condition, he should have conducted some work on those books of accounts. And third one, those books of accounts must be related to the client from whom amount of fee is due. And finally, there should be certain amount of fee due from the client. Only if these four conditions are satisfied, auditor can exercise his right of lien on the books of accounts. Next, coming to the powers or rights of C&AG. This concept, this powers of C&AG, we have discussed detailedly in PSU audit, public sector audit. Generally, C&AG will be having right to conduct supplementary audit and right to comment upon the supplementary audit report, and it is also having right to order for test audit. These are the rights, powers or rights of C&AG. Next, coming to duties of the auditor. This is important. He is having a duty to inquire into certain matters specified under section 143 subsection 1. Now, there are certain points to be reported in section number 143 subsection 1, and also there are certain points to be reported under section 143 subsection 3. What is the difference between these two? Now, as per section 143 subsection 1, he has to inquire into these 6 matters specified here. After inquiring, if he finds any negative comments on these 6 points, only then he has to report in the audit report. If he doesn't find any negative aspects with related to these 6 points as per section 143 subsection 1, then he need not report them in the audit report. That is 143 subsection 1. Coming to 143 subsection 3, here there are around some 11 points. Now, of these 11 points, has to be mandatorily reported by the auditor. Even though he finds any negative remark or he doesn't find any negative remark, they must be mandatorily reported in the audit report. This is the difference between 143 subsection 1, 143 subsection 3. Now, what are the matters that has to be inquired by the auditor as per section number 143 subsection 1? First of all, whether loans and advances that have been given by the company are properly secured or not, and whether the terms and conditions of those loans and advances are prejudicial to the interest of the entity. That is the first point that has to be verified, inquired by the auditor. Next, whether transactions represented by mere book entries are prejudicial to the interest of the company. That is the second point. Next, whether shares, debentures and any other securities which are investments of the company are sold at a price less than the cost of acquisition. If this has happened, it has to be reported by the auditor as a third point. And next, whether loans and advances made by the company have been shown as deposits in the books of accounts of the company. If this has happened, even this has to be reported. Next, whether any personal expenses have been charged to revenue account of the company. This has to be reported. And finally, if during the year any shares have been allotted for cash, whether such cash has actually been received. If not received, whether the position that is shown in the financial statements is correct or not. this has to be reported by the auditor. These are the 6 points that has to be inquired as per section number 143 subsection 1, and they have to be reported only if there is any negative comment regarding these aspects. And coming to duty of auditor to report under section number 143 subsection 3, there is a huge list under section 143 subsection 3. Let us see. First of all, auditor has to report whether he has obtained all the information and explanation that is required for the purpose of conducting the audit. That has to be reported. Next, whether company has maintained proper books of accounts or not, even that has to be reported by the auditor. And if the company is having any branches, whether the relevant documents and relevant returns related to books of accounts of the branch have been received by the auditor. If received, how auditor has dealt with these returns during his audit, even this has to be reported by the auditor. And auditor has should also report whether company's balance sheet and profit and loss account, basically the financial statements, whether these financial statements are in agreement with the books of accounts of the company or not. This point has to be reported by the auditor. And next, whether these financial statements they are complying with the accounting standards. If Ind AS is applicable, whether they are complying with the Ind AS. And whether auditor has observed any transactions that are having adverse effect on the functioning of the company. If he has found any such transaction which are having adverse effect, even those has to be reported. And whether directors are disqualified under section 164 subsection 2. If any of the director is disqualified, the same has to be reported here. And whether there is any qualification of the auditor relating to maintenance of accounts of the company. Okay, if auditor has found any matter which is having adverse effect on the maintenance of books of accounts, even that point has to be reported. And whether company has adequate internal financial controls over financial reporting. Basically on this he will be giving again a separate opinion. Along with that, he should also report it here in section number 143 subsection 3. And there are certain other matters that has to be reported under rule number 11. Basically this rule number 11, earlier there were 3 points, those have been increased to 4, next to 5, now there are 6 points that has to be reported under this rule number 11. What are the 6 points? First of all, whether there is any impact on the financials of the company due to any litigations. If there is any impact, whether such impact has been properly disclosed in the financials of the company. Okay, simply whether impact of litigations have been properly disclosed in the financial statements. Next, whether provision for the foreseeable long-term contracts have been made in the books of the company. Okay, including derivatives. Okay, that is the second point that has to be reported as per rule number 11. And if there is any delay in transferring amount to the investor education and protection fund, basically if amount of dividend is not paid for a period of 7 years, okay, if it is lying in unpaid dividend account, then it has to be transferred to the investor education fund. Whether such amount has been properly transferred within the time period or not, that has to be reported. Next, whether dividend that has been declared by the company or paid by the company is in compliance with the provisions of Companies Act 2013. Here there are certain provisions that are applicable to payment of dividends. Even those provisions we will be reading. Basically these provisions they are present in section number 123. That provisions we will be reading. Next, from financial year 2022 onwards, auditor should also report whether the accounting software that the company is maintaining is having feature of maintaining audit trail or not. If such feature is there, whether the company has tampered with that feature during the year or not. Okay, so this has to be reported by the auditor. From financial year 2022 onwards, it is mandatory for all the companies to have accounting software that is having feature of audit trail. Okay, audit trail means basically if there is any alteration made in the transaction, that has to be log has to be maintained. Okay, auditor should be able to check the chain of transactions. Okay, how the transaction has been altered and who has altered, all this will be coming under audit trail. Next, finally, auditor should also report whether management has given a representation stating that our company has not given any loan or advance or any amount to any intermediary with an intention of benefiting such amount to the ultimate beneficiary. We have not given any such loans except those loans that are disclosed in the notes to accounts. That is the first representation. In the same way, our company has not received any amount in the form of loan, advances or investments from any funding party with an intention or with an agreement to help to the ultimate beneficiary. Okay, we have also not received any such type of amount. This is the second representation. Thirdly, auditor has to report that during his audit he has found nothing which causes him to believe that the representations that were made by the management are wrong. So this is the reporting that has to be done by the auditor as per section number 143 subsection 3. After that, still there are other duties of the auditor, such as it is the duty of the auditor to sign the audit report, and auditor has to comply with auditing standards while conducting the audit. Next, auditor is also having a duty to report the fraud. I think that point is missing here. Okay, now there is a responsibility on the auditor to report the fraud. This fraud reporting, it will be bifurcated into two. One is amount involved in the fraud is less than or equal to 1 crore rupees, and another one is amount involved is more than 1 crore rupees. If the amount involved is less than 1 crore rupees, then the auditor has to report the fraud to the audit committee or the board of directors. If the audit committee is present in the company, to the audit committee. If audit committee not present, to the board of directors. Within 2 days, following has to be reported: amount involved in the fraud, and who are the persons that are involved in the fraud. There is another one more point that has to be reported. I don't remember that point. Okay, this has to be reported by the auditor to the audit committee if the amount involved is less than 1 crore rupees, and if the amount involved is more than 1 crore rupees, then within 2 days he has to first of all report the fraud to the audit committee or board of directors, and he should wait for 45 days in order to audit committee or board of directors to give their reply. And once they give their reply within 45 days, within next 15 days he has to forward his report and reply of the audit committee or board of directors to the central government. If the audit committee they don't give their reply, then after completing 45 days, auditor has to forward only his report to the central government. Okay, this is the fraud reporting that has to be done by the auditor. Next, audit of branch office. First of all, every company, apart from maintaining books of accounts related to its head office at the registered office, it should also maintain the books related to transactions of branches. Okay, and on a periodical basis, the branches they have to send their summary of summary return related to transactions that has taken place at the branch to the head office. Hope this is clear. See, every company shall keep its books of accounts at head office, including branch transactions on an accrual basis, and it may keep at such other places as board of directors decide. Okay, if the company wanted to keep books of accounts at some other place other than head office, then board of directors by passing a resolution they can keep books at some other place, but within 7 days of passing such resolution, it has to intimate to the registrar of companies what is the address at which the books of accounts has been kept. Okay, and if the branch office is outside or in India, summarized returns has to be sent to the registered office on a periodical basis, and books of branch may be audited either by the company auditor or by some other auditor, and in case of foreign branch, books of the foreign branch can be audited by such accountant who is eligible to be appointed as auditor as per those foreign laws. Okay, and branch auditor, he shall get the report of the branch audit. Okay, the branch auditor, after conducting his audit, he should send that report of branch to the company auditor. Hope this is clear. And coming to maintenance of cost records, apart from maintaining normal financial records, some companies, not all companies, okay, central government, it will prescribe certain companies, those companies, they have to maintain cost records, okay, by companies prescribed by central government. What is the format for maintaining this cost records? It is form number CRA1, CRA1. These has to be maintained in addition to normal records. Now, relating to this cost records, there is one particular point in CARO also. Okay, if you remember clause 6 of CARO, auditor has to report whether the company is required to maintain cost records. If yes, whether the company has properly maintained the cost records or not. That has to be reported as per clause 6 of CARO. Next, cost audit. After maintaining these cost records, cost audit has to be conducted. Even this cost audit is not applicable to all the companies, only certain specified companies. Okay, for specified companies this cost audit will be applicable, but there are certain companies to whom cost audit is not applicable. Okay, not applicable to the companies whose revenue from exports in the foreign exchange is more than 75% of the total revenue. For those companies, cost audit is not applicable. And the companies who are operating from SEZ, special economic zone, even for those companies, cost audit is not applicable. Companies who are involved in generation of electricity for the captive consumption purpose, okay, for their own consumption purpose they are generating the electricity, even for those companies cost audit is not applicable. These are the companies for whom cost audit is not applicable. And the companies for whom cost audit is applicable, they have to appoint cost auditor, and the qualification of the cost auditor is he should be a cost accountant, CMA, okay, cost management accountant. And the cost auditor has to be appointed within 180 days from the commencement of the financial year. After appointing the cost auditor, intimate to central government within 30 days of appointment or 180 days of the financial 180 days of commencement of financial year, whichever is earlier. Okay, and this intimation has to be given in the format CRA2, okay, CRA2, and cost auditor shall be a cost accountant. Hope this is clear. Just a second, this is not working. Just give me a second. There is some problem with this tab. Just a second. And this cost audit report, it has to be forwarded to the board of directors within 180 days of closure of the financial year. And board of directors, they have to forward this within 30 days to the MCA. They have to file it with MCA. Okay, they have to report has to be furnished to MCA, that is central government, in CRA 4. And this audit report, cost audit report, will be in the format of CRA 3. Okay, next, coming to the financial statements. These financial statements, they shall give true and fair view, and they shall comply with accounting standards. If Ind AS is applicable, they have to comply with Ind AS, and they shall be laid before the annual general meeting. Okay, in every annual general meeting, financial statements has to be laid before the members of the company. And coming to reopening of accounts of the company, generally in order to reopen the accounts of the company, you have to make application to central government, income tax authorities, various tribunals, SEBI, and all other respective authorities. After making application, tribunal should pass a order stating that the books of accounts or the financial statements, they have been prepared fraudulently and the affairs of the company has been mismanaged. Once the tribunal has passed this order, only then books of accounts can be reopened. And also, reopening of the accounts can be done only for a period of previous 8 years. Beyond 8 years you cannot reopen, because maximum period for which the companies has to retain their books is for 8 years. And voluntary revision of financial statements or the board report can be done if these financial statements or board report are not in compliance with section number 129 for financial statements and 134 for the board report. In that case, these financial statements or board report can be voluntarily revised. Here also this voluntary revision can be done only for preceding 3 financial years, okay, not beyond preceding 3 financial years. See, up to 3 financial years after approval of the tribunal. Even for this voluntary revision also you should take the approval of tribunal. Hope this is clear. Next, consolidated financial statements. Whenever a company is having any subsidiary associate, they have to mandatorily prepare consolidated financial statements. Now there is a certain exemption that has been granted in case of certain companies from preparation of consolidated financial statements. What are those companies for which exemption is granted? A company which is either wholly or partly owned subsidiary and which has intimated to its members stating that we are not going to prepare consolidated financial statements, and the members have not objected to the decision of the company of not preparing consolidated financial statements. That is the first condition that has to be satisfied. Along with that, the company's securities are not listed on the stock exchange or not in the process of listing in the stock exchange, either in India or outside India. Even that condition has to be satisfied. And finally, either its ultimate holding or any intermediate holding is preparing consolidated financial statements. If these 3 conditions are satisfied, then that particular company, even though it is having subsidiaries and associates, it need not prepare consolidated financial statements. Next, coming to NFRA, National Financial Reporting Authority. Basically, this NFRA, it has been formulated to give certain suggestions to the central government regarding accounting standards, auditing standards, and also to oversee the profession of this chartered accountancy. So, what are the powers and duties of this National Financial Reporting Authority? First one, it will give recommendations to the central government on accounting and auditing standards. While central government wanted to bring any new accounting standards, auditing standards, or wanted to make any changes to the existing one, then it will take recommendations of NFRA. This NFRA, it will consult our ICAI, okay, and it will also monitor and enforce compliance with the existing accounting standards and auditing standards. It will also ensure quality of service of the professionals. Basically, NFRA, it has reviewed audits of various companies and it has given various reports. Okay, if you read those reports, they are very fantastic. Okay, those reports, they are pointing out the mistakes that have been done by the auditors during the audits. Big Fours, even Big Fours, they have committed a lot of mistakes in the audit. Okay, all those mistakes, they are highlighted in those reports by NFRA. If you have time, you must read those reports, they are fantastic. And NFRA will also perform such other functions which are related to these aspects. Okay, such other related functions. Now this NFRA, it is not applicable to all the companies. Only for certain large companies this NFRA is applicable. What are those companies for which NFRA is applicable? First of all, listed entities. That means for auditors of all these companies, NFRA will be applicable for all the listed entities. And unlisted public companies whose paid up share capital is more than or equal to 500 crores or turnover is more than or equal to 1000 crores or borrowings are more than or equal to 500 crores. Okay, this is for unlisted public companies. Next, insurance companies, banking companies, electricity companies, and companies governed by any other special acts. Even for these companies, NFRA will be applicable. And companies referred by central government. Okay, central government in the public interest, refers any company to the NFRA. Even for those companies, NFRA will be applicable. Okay, and foreign subsidiaries of above companies whose net worth or income is 20% or more of the total consolidated income or net worth of that particular group. Even for the auditors of those foreign subsidiaries, NFRA will be applicable. Next, Once NFRA has become applicable to the company, after becoming applicable, either the company has become unlisted or company has fallen below those threshold limits of applicability. Even then, NFRA will be applicable for a period of 3 years. Okay, from the date of becoming unlisted or from the date of falling below those thresholds. Hope this is clear. And every auditor of above companies have to file a return with NFRA. See, not the companies. Auditor of above companies have to file a return with NFRA in NFRA 2 every year on or before 30th of the November. Hope this is clear. These are the provisions related to NFRA. Next, moving through Schedule 3. Basically, Schedule 3 speaks about the format of the financial statements. In the Schedule 3, we are having two divisions, Division 1, Division 2. Division 1 speaks about accounting standards, Division 2 deals with Indian accounting standards. In Division 1, we are having two parts. Part 1 deals with balance sheet, Part 2 deals with profit and loss statement as per accounting standards. Division 2 India's, we are having three parts. Part 1 deals with balance sheet, Part 2 P&L, Part 3 certain aspects related to consolidated financial statements. Now, non-applicability of format of Schedule 3. There are certain companies for which the Schedule 3 format is not applicable. What are those companies? Insurance companies, banking companies, electricity generation companies, and such other companies for which a separate format is prescribed in their respective acts. Next, law relating to dividends. There are certain provisions relating to dividends. First of all, companies, they can pay dividend only from the current year profits or from the previous year profits, that is reserves, free reserves, after reducing the depreciation. Hope this is clear. Even companies can also pay dividend from the grants that has been received by the government specifically for the purpose of payment of dividend. From these three sources, dividend can be paid by the companies. Now, there are certain points that has to be considered relating to this payment of dividend. First of all, declaration of dividend is not mandatory. If board of directors, management, they feel that dividend has to be declared, they will declare. Okay, it is discretion of the management whether to declare a dividend or not. That is the first point. Next, dividend will be always recommended by the board of directors, and this recommended dividend, it will be approved by the shareholders in the general meeting. Hope this is clear. Now, shareholders, they cannot increase the recommended dividend. Okay, dividend that has been recommended by the board of directors, it cannot be increased by the shareholders. They have to approve the dividend as it is, or they can reduce the dividend if they want, but they cannot increase the recommended dividend. Hope this is clear. Shareholders cannot increase recommended dividend, but they can decrease the recommended dividend. And once dividend has been declared, it has to be paid to the shareholders within 30 days. And it has to be paid in cash. That means dividend should always be paid in cash. That means it can be paid through bank. It doesn't mean that you should not pay through bank. It is that dividend cannot be declared in kind. Okay, it should always be in a monetary form. You cannot give dividend in a kind. Okay, next, this dividend that has been declared has to be deposited in a separate bank account within 5 days of declaration of dividend. See, once you declare the dividend, within 5 days deposit in a separate bank account. Then within 30 days of declaration of dividend, you have to pay it to the shareholders. If you fail to pay the dividend to the shareholders within 30 days, then within next 7 days, you have to deposit that dividend in a separate account by name unpaid dividend account. If the amount is if the amount is present in that unpaid dividend account for a period of 7 years, then that amount has to be transferred from the unpaid dividend account to IEPF account. Okay, this investor education and protection fund, to that fund the unpaid or unclaimed dividend has to be transferred. This is the procedure. Next, failure to pay the declared dividend. See, it is not failure to recommend the dividend. No, failure to pay the declared dividend. Once you have declared the dividend, you have to pay it off. Hope this is clear. There is a difference between recommendation and declaration. Recommendation means still it is not approved. Board of directors, they have just recommended. Once it has been approved by the shareholders, then it becomes a declaration of dividend. Once a dividend has been declared, you have to pay it off to the shareholders. Now, if you fail to pay the declared dividend to the shareholders, then officer in default will be punishable with imprisonment of up to 2 years and with a fine not less than 1,000 per day. And the company shall have to pay interest at the rate 18% per annum. Next. Now, no offense will be deemed if the dividend is not paid by the company because of operation of law, or shareholder has told the company to comply with certain conditions for payment of dividend, but company was not able to comply with those conditions. Even in that case, there is nothing wrong with the company. So even in that case, if the company not paid the dividend because it is not able to comply with the requirements specified by the shareholder, it will not be deemed to be offense committed by the company. In the same way, if there is any dispute regarding right to receive the dividend, okay, dispute regarding ownership of the shares, even in that case, there is nothing wrong with the company. And if the company has lawfully adjusted the amount of dividend that has to be paid to the shareholder against the amount that has to be received by the shareholder from the shareholder to the company, okay, company can lawfully adjust the amount of dividend against the amount that has to be received to the company. And then if company is not able to pay the dividend due to any other reason in which there is no default of the company, okay, there is nothing wrong with the company, due to any other reason company is not able to pay the dividend, but there is nothing wrong, that nothing default in the company. In those cases, there will be no offense on the part of the company. Next, this flow of dividend. Once dividend has been declared, it has to be transferred to separate bank account within a 5 days, and it has to be paid to the shareholders within 30 days. If company fails to pay or transfer to if the company fails to pay the dividend within 30 days, then it has to transfer that unpaid dividend to unpaid dividend account within 7 days. If it delays in transferring the amount to this unpaid dividend account within 7 days, then it has to pay an interest of 12% per annum. Then within 90 days, place a statement of unpaid dividend containing name, address and amount on the company's website. Okay, it has to prepare a statement containing details regarding unpaid dividend, and that statement it has to be placed on the company's website and also some other authorities website. If the amount of dividend remains unpaid for a period of 7 years, then that amount has to be transferred from the unpaid dividend account to IEPF fund, Investor Education Protection Fund, along with the shares. Okay, even the shares on which dividend has been unclaimed has to be transferred into the name of IEPF account. Now, what are the points that has to be verified by the auditor while conducting audit of this dividend? First of all, he has to check whether declared dividend is out of profits after deducting the depreciation or not, whether depreciation has been deducted or not. Then whether the dividend has been recommended by the board of directors and such recommended dividend has been approved by the shareholders in the AGM or not, that has to be verified. Next, that declared dividend, it should not exceed recommended dividend. We have already discussed this point. Shareholders, they cannot increase the recommended dividend, but they can decrease the recommended dividend. Next, advance calls paid should not be considered for the purpose of payment of dividend, and members register has to be closed as per section number 91 during this for the purpose of calculating that record date. And the dividend has to be paid within 30 days of declaration of dividend, and it has to be deposited in a separate bank account within 5 days. All these points which we have discussed till now, they are just have to be verified by the auditor during conducting audit of a dividend, and it has to be intimated to the stock exchange that we have declared the dividend. And if there is any complaint regarding non-payment of dividend, auditor has to see whether any complaints have been received from the shareholders regarding non-payment of dividend. If complaints are received, whether corrective action has been taken against those complaints or not. This has to be verified by the auditor. Next, what are the amounts that will be credited to investor education and protection fund? First of all, any grants or donations given by central government, state government or any third party will be credited to this fund, and amount of unpaid dividend will also be credited to this fund, and amount that is lying in the investor education protection fund account as per Companies Act 1956 will be transferred to the IEPF account of this act. Hope this is clear. Next, interest on investments that are made from this fund. From this fund, if you have made any investment, on that investment if you have earned any interest, that will also be credited to this IEPF fund. And if there is any application money received and it has to be refunded, even that amount it has to be credited to the IEPF account. And matured deposits and debentures with the company, that will be credited. And sale proceeds of fractional shares, when you allot any bonus shares, then there is chance of arising some fractional shares. Even those fractional shares, proceeds of selling those fractional shares has to be credited to IEPF account. And redemption of amount of preference shares, if it is unclaimed for a period of 7 years, even that amount has to be credited to IEPF account, and such other amounts. These are the amounts which will be credited to IEPF account. Next, what are the debits to this fund? That is utilization of IEPF fund. First of all, you will utilize this fund for the purpose of refunding the any unclaimed dividend. Okay, unclaimed dividend, it will be credited to the fund. If any shareholder he comes to the IEPF fund, makes application claiming the dividend, it will be paid to that particular shareholder. In the same way, this application money, the redemption of preference shares amount, all these unclaimed amounts, if they are claimed by the particular respective owner, they will be refunded back to that owner from this IEPF fund. Next, expenses related to promotion of investor education and awareness will also be expended from this fund. Okay, even those expenses will be debited to this fund account. Next, distribution of any disgorgement amount as per court order. Now in the stock market, various scams might be taking place. Now due to those scams, if any genuine investor has suffered losses, then sometimes court, what it will do is it will pass an order to reimburse that amount of loss incurred by the respective investor from this IEPF account. In those cases, amount in the IEPF account will be used for the purpose of discharging that loss incurred by that particular investor. And also reimbursement of legal expenses that have been incurred for the filing of class action suits. Generally shareholders, debenture holders, they will be filing these class action suits against the companies. For that purpose, if any expenses are incurred, those will be reimbursed from this IEPF account, and any other expenditure which is incidental for this purposes will also be debited to this IEPF account. This is how IEPF fund will be utilized. Now coming to LLP audit. First of all, to which LLPs, to which limited liability partnership firms audit is mandatory? Those LLPs whose turnover is more than 40 lakhs or whose total contribution is more than 25 lakhs. Only for those LLPs audit is mandatory. Next, LLPs, they have to file certain annual filings with the MCA. There are two types of filings that the LLP has to file. First one is Form 11, that is annual return. It has to be filed within 60 days from the completion of financial year. Second one is Form 8. Okay, we'll be calling it as statement of account and solvency. This has to be filed within 30 days from the end of the 6 months of completion of financial year. Okay, these are the two compliances or two filings that has to be made by LLP. Now in case of LLP, auditor will be appointed by designated partner of the LLP, and for the first financial year, auditor can be appointed at any time but before completion of the financial year, and from subsequent financial years, auditor has to be appointed at least 30 days prior to the completion of financial year. And what are the duties of the auditor with regard to conducting audit of LLP? First of all, in his audit report, he has to mention whether records that has been maintained by the LLP appear to be correct and reliable or not, and then he has to report whether he has to able to obtain all information and explanation that were necessary for the purpose of his audit, and whether there were any restrictions that has been imposed on him by the LLP during his audit, that has to be reported by the auditor in his audit report. And he has to read the LLP agreement, and so that he will be able to understand various terms and conditions regarding business of the LLP, and he should also read the minutes book, if any, maintained by the partners of the LLP, so as to determine whether any resolution has been passed regarding maintenance of these books of accounts of the company. Okay, these will be duties of the auditor regarding LLP audit. After this, we will be having CARO, the revision related to CARO. I have already recorded it. It is around 20 minutes video, which I have placed in the playlist section. You can after completing this revision, you can revise CARO. By that, company audit revision will be completed. Okay, and if you want to purchase classes, you can visit our website lecturepedia.in and you can place your order. Hope this revision will be useful to you, and you can download this revision notes from our Telegram channel. The link for the Telegram channel I will be giving it in the description. Okay, take care, bye bye.